Here's an update to my video about these charts that show that Nasdaq seems to be in correction territory while Chinese stocks are picking up. So here's an updated chart and what has happened this week. Basically, Nasdaq lost all of the support here, retested the trend line, but then comes crashing down. While Chinese stocks, yes, they're also very much in the red, but they're kind of crashing upwards here a little bit. And notably, the media is noticing it now. And here are some of the explanations that we could see this week.
A huge jump in Chinese stocks today after their central bank cut lending rates. Investors betting policymakers will ramp up easing to help sectors that got hit hard during months of regulatory crackdown and deleveraging. The China ETF, the KWEB, is tracking for its best month since January of 2021. It's up about 7% just today. Joining me now is Brendan Ahern. He's the Chief Investment Officer with Crane Shares. Brendan, it's great to see you again. And this is certainly the good news a lot of these investors have been waiting for. But how good of a news is it if the economy is softening?
Well, the economy is softening, Kelly, but certainly we think that similar to what the great scoop CNBC had on Peloton is what you're seeing in China and what will happen here is that you're having global stimulus come down. And that's been going to be a big problem and an issue for China because a lot of the economy has been supported by export-driven manufacturing. And over the last week, we've seen a movement toward monetary easing in China. And we also believe that's going to lead to a pickup in consumption, that domestic consumption has to offset the weakness we'll see in export-driven manufacturing. And that's going to be a great thing for the e-commerce companies within KWEB.
Which would signal to everybody that maybe the big crackdown is over. I mean, do you think that's what's happening as we start to approach that sort of party Congress later this year? Is it time for them to start shoring up the economy?
Well, I think that they have to, that the economy has really been supported by this export-driven manufacturing. And as that slows, what's going to offset it? Domestic consumption is something where the Chinese government can stimulate the consumer. They can provide incentives. They're also going to be monetarily easing to try to support the broader economy. But I think 100% you have a combination. You know, last year we dealt with Archegos. We dealt with the China internet regulation. We've got the Holding Foreign Companies Accountable Act. And then I think in November and December, we dealt with a lot of tax loss harvesting into individual stocks. And as these issues abate to varying degrees, investors are really underweight these names. And you kind of know the market does what's least expected. And a KWEB rally would certainly catch a lot of investors flat-footed. Global emerging market mandate managers have been underweight China. They're overweight India. And particularly within China, historically, they're not buying Bank of China or, energy stocks in China. They're buying the Alibabas, the Tencents, the JDs. So that historical overweight to the China internet space has become an underweight. And that's what makes days, really the last several days, where you see not only China outperforming India, but particularly these China internet names outperforming India by a significant measure. That's creating a lot of pain in the active EM world. Those managers need to balance. They need to catch up with this by coming into the names.
Very, very interesting, and may help explain why we are seeing such a pop today. Crane shares back up to almost 40. Brendan, we'll leave it there. Thanks for your time today.
And of course, the CIO of Crane Shares here is talking his book because he's literally running a fund in that strategy of Chinese equities. But also others have noticed.
Do you buy into that narrative that we are going to see policy easing, whether it's the monetary side of things, even as early as today, or the regulatory side of things? Of course, this GTV chart on the Bloomberg showing you how those easing speculation rumors actually led to property stocks rallying.
Yeah, no, we are buying that particular narrative. Actually, we bought into that narrative, I think it was October last year, when sentiment on China was really bad. People were saying it's not an investable market anymore. Most funds were significantly underweight. we said we think actually that some stimulus is going to come through probably by the end of this, that year, 2021 it was, and into 2022. So we moved overweight China at that particular point in time. And we see that now developing. You see actually that some stimulus is coming through on the monetary side. We've seen a rate cut. We see some stimulus on the fiscal side taking place. Valuations are still low. And what you also see is that mutual funds who were significantly underweight on Chinese equities in October, November this year, starting to rebuild positions there. So we see that they're still underweight, but not as much underweight anymore. And I think they can buy more, and that would support the market to a certain extent as well.
Will Chinese policymakers' actions shield the markets there from, say, the volatility that we could see, given that the U.S. is going the other direction?
Well, not completely. I mean, the correlation, the sensitivity, you could say, of in particular the mainland Chinese markets with the US market is not very high. So if the US market goes down, Chinese markets could go well up. But we cannot ignore, of course, that if the largest stock market in the world is having a bit of a tough start of the year, other markets will get dragged into that. So on a near-term basis, I think, that will be a bit of an overhang for emerging markets in general as well. But eventually, I think we've already seen a large sell-off in particular Chinese equities last year. The valuation story is much lower. The interest rate story is quite different. In the US, interest rates are going up. In China, they're going down. In the rest of Asia, it's for the moment a kind of a hold, and maybe later on in the year, these rates need to go higher there up as well. But the dynamics are very different. So in the near term, if the US struggles overnight, Asian stocks might struggle a bit as well. But I think as we go deeper into 2022, we're going to see a differentiation there. And Chinese equities could actually turn out to be the exciting stuff of this year of the tiger.
And so more broadly, the question is whether or not this can help for a rebound in Chinese equities and whether or not these crackdowns are somewhat over. And while I would say the crackdowns are not over, actually I also still see many negative news towards Chinese equities, and some of them come out as false and untrue, possibly launched by some short sellers that are still trying to depress Chinese share prices. But anyways, there might be more bad news regarding China and the policies and so on, but it seems like the narrative is currently shifting a little bit. And once again, we see something that previously didn't happen, namely that the officials in China are kind of putting out those false rumors that are notably not true, and some English-speaking commentary around the policies that China is indeed an economy driven by private companies that need innovation and also a supportive monetary and policy environment.
I think we have a lot of changes. 70% of innovation now come from the non-state sectors.
Right.
You cannot imagine, say, 20 years ago, 30 years ago. So that's the long-term result of reforms and the structural changes.
Right.
But for the short run, you need some kind of the monetary policy, fiscal policy, and some other emergency policies to support the reform.
So that's it for now. Clearly can't say that Chinese equities are a safe haven right now. It's a kind of red right now, and it feels horrible to be invested in this market in general. The Chinese stocks seem to be falling the stairs up while the US stocks are taking the escalator down. That's the current situation. Let's see what the next week brings with the Fed announcements and many more important milestones. So thank you guys for watching, and see you in the next one.